Hey, I'm Mr. Roboto, back again with a September 15 trade review. Very quickly, we'll talk about my QQQ thesis going into the day, and then we'll talk about the 4 trades I took. I took Aapl puts, SPY calls, Tesla calls, and also Tesla puts. And then at the end, we'll talk a little bit about my reflection on the day regarding FOMO hours and then discipline in general. So let's dive right in. So QQQ, my thesis on today for QQQ was that we would have a rally at the open, and then we would be faced with a sell-off. And I thought we would continue selling off once that sell-off started. So why did I think that we would have a fake out in the morning followed by a sell-off? Well, it's very clear. So if we look at the daily on QQQ, again, ignoring today's candle. Very bearish the past 5 days. We did put in this higher low yesterday, but again, at the end of the day, we ended up selling at the lower end of this candle. So still pretty bearish. But let's look at it a little bit more closely. So if we go to the 30-minute and we go to the last 5 days, this is why I thought we would end up having a fake out and then with a breakdown to the downside today. If you notice in the after hours, every time we go down, we end up recovering a lot of it again in the after hours. Look at this. We ended up recovering a lot of the sell-off in after hours, right? And then we would have this fake out and then breakdown. And then again, here, we actually recovered a lot of it before the end of day. And then we, went all the way up in the morning and then met by supply and then we sold off again. But the difference this morning was that the buying was actually less. We didn't recover as much of this sell-off as we did previously. Here we recovered this entire range. Here we recovered a big portion of this range. Again, this entire range. Here the buyers were barely able to recover anything, and then there was actually a dip into open. Whereas here we rallied into open. Here we rallied into open. So this to me was screaming very bearish action. It was telling me the bulls were not in the aftermarket hours, and they were very weak, and that the bears were actually in control this morning. So when I saw this dip, I thought that there would be a rally. It'd be a weak rally, weaker than the days prior, and that it would be immediately met with sellers, and that we would be going down for the day. I didn't expect this bounce. Maybe, there was a 4-hour demand here that was strong, but I thought that starting the day super bearish, that we would actually continue selling off. That's not what happened. That was just, my thesis going into the day. Obviously, you have to trade what ends up happening. But this is why I thought that we would have a rally at open, a very weak rally met with strong selling. So this is how I got my zones. This is a 30-minute demand zone. You can see there was this green basing candle here, and this is where I got this 30-minute demand zone. I took the open of this candle all the way down to the tail, to the wick. And this is another reason why I thought that we would not have a big rally at open, because this demand zone is very weak to me. And it's arguably not even a demand zone, because this rally from this zone is very weak. You would expect a huge rally, and that is when there was a lot of demand in that zone. Here, very weak rally. So again, not a big zone for me, and I actually marked this as weak. We have this 1-hour supply, is essentially where we got stuffed today. So if we go to 1 hour, this is why supply and demand. I think it's just so key, because look at this green basing candle right here, right? At the open of this candle is where I start my supply zone, and then all the way up to the top, that's where the top of this supply zone is. And this is the 1 hour, so I marked it as a 1 hour supply. It has been tested before, so generally it's a little bit weaker, but that's not necessarily always true. So I just mark it as used, and that's just something else that I keep in mind throughout the day. You know, if we rally back into the supply zone, I got to really pay close attention to the price action here because it has been tested before. So sometimes you'll see if it's been tested before, it can break through it the next time. And then this was actually a very good demand zone. I didn't end up playing this, but this would have been a great opportunity to go long. And you would have gotten a bulk of this move if you would have went long here. And very quickly, how I got this today was, if you go to the 4 hour, let's just go intraday. Let's go 30 days, 4 hours. You can see here, there was, where's the 4 hour? Yeah, so I just took, I took this general area here, and this is where I ended up drawing my 4 hour demand zone. This might actually be a 6 hour demand zone. Well, I can't find the actual candle now, but for some reason I had this marked as a 4 hour demand. Let me see if I can find this. This was a level that I had drawn previously, maybe like a while back. I won't spend too much time on there. But anyways, this is where this is what I had marked as a 4 hour demand zone. I didn't end up playing this, but this would have been a great place to go long. Okay, so the first trade I'll talk about was SPY calls. So I took SPY calls I actually took SPY calls yesterday right here. So I had an overnight position in SPY. I thought this was a good place to go long. There was a 2 hour demand zone here. And this is a very speculative play. So it's just a lotto size for me. I was willing to lose all of this. I was willing for these contracts to go to zero. So again, very small lotto size for me. And then based off of this 2 hour demand. So where did I get this 2 hour demand? So if you go here, go to 10 days, actually further back. Let's go to 30 days. So 30 days here, there's a demand zone here. I ended up drawing a 2 hour demand. And then actually, if you look at the hourly, there's a gap here. And I like to mark these gaps because it's, anytime you have a gap, especially if you're going into it, there's a good chance that you're going to end up filling it. And that's actually what we did. We ended up filling this gap exactly and then bouncing back up. So I ended up drawing the 2 hour demand zone from here. Let's see if we can find this candle that I got it. Yeah, so this red candle is actually what I used to draw my 2 hour demand zone. The open of this red candle all the way down, and I just took this green wick right here because if I would have just drew it to here, that would have been a very small zone. So I just like to extend it to the next wick. That's fine. Okay, and then intraday. So again, I took calls here. I ended up scaling out of my calls out of half of my calls in the morning. It was slightly green for all of maybe 30 seconds, so I sold it. Sold half right here, and then I kind of just forgot about it because it was just such a small size. And then at the end, later on in the day when SPY was rallying, I saw it up here. It was a pretty good percentage, so I went ahead and took the rest off. I should have held on to it, but at this point, I was happy to just add another base hit into my P&L for today. Aapl was my biggest trade for today. So my thesis on Aapl. Aapl was very weak yesterday. It did have this rally at the end of the day, and then it kind of gapped up in the morning. But the fact that this was my 30-minute supply zone, So I'll show you how I got this supply zone. Um, so 30-minute supply. So 30-minute supply, I pretty much just took this candle right here. I like this candle. There's 3 different candles I could have taken the open from, but I took this one because it's the lowest. So I like to be conservative anytime I'm deciding between candles. So I picked this as the start of the 30-minute supply, and then I just took it all the way up to like right around here. Wait a second. Let me turn off. Oh, this is where I got it, right here. So this candle right here, I like this candle, because, if I would have taken it right here, I think that would have been too conservative. So I ended up taking the 30-minute, the 1 hour supply right here. Oh, sorry, I'm talking about a different thing. So sorry, 1 second. I really want to show you guys where I'm getting these supply zones. I can't seem to find the exact candles right now. Okay, so here I ended up taking this and I drew it all the way up to the top. I think I just liked it. I like this candle right here because this zone right here, it's in after hours, so it's not going to be as strong. There's less volume in after hours. So I like to take it up to the next candle, to the next to like the next nearest wick, which is right around here. And so you can see it worked really well for open. So my thesis on Apple was that it was relatively weak yesterday. It had this sort of rally, but the fact that it sold off in the pre-market, I thought if the market went down again today, that Apple would be a really good ticker to go short on. So I took a very small position up at this wick. There's a chance that it could have kept going. So I just took a very small starter. It was really good entries, however. And then at the break of open, so when the price action got below this area, I went ahead and took my full position, and then I sold some here. And then I sold, no, I think I sold it all here. And then sorry, I sold some here and then I sold some more here. And then this was actually my full position that I sold. And then in chat, I said that I'm looking to add onto any Apple pops. So I added puts here, and then I sold them here, and I sold them here, and I added here, and I sold here. I played Apple a lot of times, and I can actually show you my interactions on DOS. So again, this is where I actually do my trading. So if you go to Apple, so these are all my interactions. There's buys and sells, buys and sells, buys and sells. So there's a couple of trades that went on in Apple today. But at the end, I played all puts, and it was all really good trades for me on Apple today. Very next was on Tesla. So I actually played Tesla long today. So Tesla was again, relatively strong at end of day yesterday. But I did think it would sell off, just with the rest of the market, especially with QQQ. So this is how I ended up trading it. There's a 30-minute demand zone here. I got it from this red basing candle, took the open down to the wick. You get your 30-minute demand. So pretty much just played that today. And this demand zone held up pretty well. This is what you'd like to see in a demand zone, buying right out of it and then coming back down and then buying right out of it again. So let's look at how Tesla ended up playing out today. So I bought calls here, I sold here. VWAP was right around here. So I sold once we got above VWAP. I figured that there would be a good chance that we would test VWAP. And that's exactly what happened. So if I put VWAP over here, I don't use the upper or lower bands. I don't know anybody who does, but so yeah, VWAP was right here. I sold right when we broke VWAP. I sold half of my position here, and then I added those calls back down here, and I sold everything again here. Sold everything up here. And then in chat, I actually said that I thought there would be a good chance that Tesla would get stuffed right around here. And it did for a little bit. So I took puts here and I sold them right here, right when it got back into VWAP, because I figured there would be a VWAP bounce. So a lot of times you break VWAP and then you're always coming back to retest it. So that's a good opportunity for a scalp play, and that's essentially what this was. Puts here, sold them here. And then I was pretty much done trading for today. But I was watching, I put this out in GMT chat. I was watching Tesla for puts today. I had it in me, like the entire day I was thinking that, I thought this rally in the equities would eventually sell off at the end of the day. That was my thesis. So I really wanted to go short on something, and Tesla was the main thing. I've already been trading for today, so I thought it would be a good candidate to go play puts on. So I thought about playing puts here. This was my original zone, but I sensed some strength in Tesla, and QQQ at this time was ripping up. So I decided to wait and forego puts until the later supply zone that I had, which was this 1 hour supply zone. So I saw that it pierced through this 1 hour supply zone, and then it sold off a little bit. And then here, I thought that there would be, I thought this would be a good risk to reward to go short on Tesla. And my risk here was only a new high of day. And there was a potentially, the reward was all the way at least to down here. So this is at least a 4-to-1 trade. If it goes down to here, I'm banking like, 4, again, 4-to-1. This is my stop right here. But it didn't go my way, and I actually, when it made a new high of day, I immediately sold my position for a loss. So that was fine. I thought this was a good risk to reward. I did want to test this short side thesis one time. In hindsight, probably not the best idea to go short on, when the trend is obviously going up for today. But in the moment, I thought this was a very good risk to reward trade. So yeah, that was the bulk of my trades for today. Again, mainly base hits, the Aapl trades, and adding to my position, selling it all, and then adding these pops. That's really the bulk of where my profit was made today. These buys up here were they ended up, I think they went like 40% when I sold them down here. And then, there was a couple of scalps down here that went about, 15 to 20% base hits that just added up and added up. Reflection very quickly. So I posted this again on Twitter. If you haven't seen this before, but here at open and on this flush at open, there's a very clear direction where the market is going, right? And if your demand zone is correct, and if it's pretty, if it's low, you have a very good chance of meeting your demand zone. So you're trading with the trend. It's a very good probability setup, and your reward. There's a high reward here, so it's very very much easier to trade when there's a clear market direction. But then, around noon, the market likes to chop around. This happens every day. The market starts chopping around. There's less volatility. All the people who are in it open are probably done trading. The actual traders on Wall Street are probably on lunch, and there's just less volatility, a lot more chop. And if you're trying to trade here, this is what they call FOMO hours. You didn't make your money here in the morning, so you're chasing the day's move here, where there's more chop, there's less range, there's less volatility, there's less volume in the market, and overall the market is just going to be very balanced. So again, you have smaller moves, you have less profit potential. There's a bigger chance of being wrong because it goes up here and then goes down, or it goes down here and then it goes back up. So if you're short or if you're long, very quickly you're going to be wrong. Whereas here, if you're short, if you made the right decision for today and to go short, you have a lot of room to sell and take your profits, right? And if you're long, very quickly you should know that you're wrong, and you're taking a cut. I mean, taking a very small loss, right? But here, this is chop central. Is not a good time to trade. I do trade here, a lot of times, but I'm taking smaller positions, and I'm cutting my losers much more quickly, and I'm very in scalp mindset here. I'll probably make 60 to 70% of my profit in the morning, and then if I can just add beer money, throughout the day in this chop area, then yeah, I'll do it. A lot of times it's not worth it for me to stay in front of the screens and trade this. A lot of times I'll give back some of my morning profits from trading in this chop. So that's just something to think about. Sometimes if you miss this morning move, maybe it's just time to, size down for the rest of the day. Maybe you just don't trade for the rest of the day. Or, you can wait until the price action breaks out of this choppy area and goes either up or goes down. And then if that volatility is strong enough, maybe you can hop back in. A lot of times that's what a power hour, 3 o'clock ends up being. And then lastly, just a very, very quick note. I did have a tweet later on. I know a lot of people had record days today. So a lot of people that I traded with had record days today. And you can kind of get in this mindset of comparing how your day went to someone who just did 20% on their account, right? So you're going to have this FOMO, and you're going to be like, well, why didn't I size up, or why didn't I take that trade, or why didn't I hold past my price target? And the minute you start thinking like that, and you start wondering, why wasn't I, why didn't I have a pair of balls and go heavy, right? Well, what you're not realizing is you're thinking about everything in hindsight, right? Yeah, I could have sized up on my Aapl puts, and I could have, did 20% on my account. But the problem is I could have also lost 20% of my account. So, there's a difference between taking advantage of the market, and taking advantage of opportunities, but then at the same time you have to manage your risk. And if I'm sizing up and into a position size that is just doesn't make sense for my account, or doesn't make sense for what I've been trading in the past couple of months, I'm just going to be too emotional being in that trade. If I would have did 10x the amount of contracts that I normally take up here, right? Yeah, I would have made a lot of money if I would have held down to here and sold. But again, if it would have went this way, I would have had a huge losing day, So I took a starter here because I knew there would be a chance that it would keep going, and then I added once I had confirmation. So you got to trade with discipline. And I'm super happy for the people who had huge days today. I'm happy to be green today. Fairly good day, a base hit type of day. These are the days that are gonna, for me, are about 80% of my days are 80 are base hit days, and I'm thankful for that. Um, so I'm looking at the bright side. Yes, there was a little bit of FOMO earlier in the day for me. So I did just have, all these thoughts start creeping into my head. But I'm not going to let it deter from how I've been trading and what's kept me green for the past couple of months. And that's just trading with discipline. And, not, my YOLO days are behind me. I've lost enough money on the YOLO days, and I've learned my lesson, and I'm more than happy to grow my account, which seems like slowly for right now, but consistently. And I know over time it's going to get the green days are going to get bigger and bigger if I keep discipline. So that's my thoughts for that. If you agree, if you disagree, I'd love to hear your comments. Reach out to me in my messages, in Discord, on Twitter, and give me any feedback. And yeah, let's kill it again tomorrow.